How many times have you sold a position only to see it run 10x from where you sold? At the end of this video, you will understand how I'm able to capture the bigger trend moves in the market with minimal risk exposure while maximizing profit, all risk-free, as well as how I view risk in the market when entering a trade and how I attempt to offload risk within what's called the bell curve distribution of price. In order to understand how to capture those bigger moves, you must first understand what's called the bell curve distribution. I covered this pretty extensively in my previous video. I'll put that in the description below if you're interested in learning more. In a nutshell, the bell curve is the symbol of auction market theory, and the essence of this very chart gives you the ability to understand as a trader where you're getting the most value for your position. Think of it as if you were selling your home and the curve represents where all the transactions in your local area for your home sold at the market. Naturally, if you're looking to sell your home, you want to sell near the higher end of the distribution or that curve. This is where the seller, i.e. short trades, would get the most value or cushion for your trade. The inverse is true if you're looking to buy a home, i.e. buying a long position. You would get the most value for your position in this area. This curve is the blueprint, if you will, of where you want to de-risk your position. I'll explain later what I mean by this. This is key when analyzing risk for any trade you want to take, whether long or short. Now, really quickly, before I go into covering the value areas, just want to point out this is a 10-minute time frame. You can use any time frame of your choosing, whether that's 5 minute, 1 minute, 1 hour, 2 hour, regardless of which time frame you trade. This distribution stands and holds true. So the first thing you want to do is find the value areas high and low, as shown in the previous graphic below. You can see clearly here that the value areas high and low will be found at these extremities, top end, low end, for the current distribution. Once you've got those value areas identified within the current market distribution, it doesn't matter if you're a scalper or a trend trader, you want to ensure you're getting the best bang for your risk by entering at those extremities to minimize your risk of drawdown and maximize your profit potential. How many times have you opened a trade that has worked in your favor, and as soon as you got into going green, only for the trade to immediately watch it come back and take you out at a full loss? Let's face it, we as speculators of the market can never guarantee that price will move through the entirety in which we are attempting to trade. Most times capture the first rotation in which we can assume price is going to go into. But what happens thereafter is out of our hands and up to the auction market process. My main goal is to execute my trade ideas and attempt to unroll the trade in such a way where even if the trade works in the initial move in my favor, comes back to take my stop, I still assume profit no matter what occurs after that initial reaction. With that being said, I'm going to go into how I actually manage the trade within this distribution. Assuming you've entered at these value areas, I manage to de-risk most of my position using the same bell curve at 70% of it here at this volume profile or balance of the current distribution or point of control. Now, when I say I de-risk, I am implying I cover my open trade at this area and assume majority of the profit there. You may ask yourself, how is selling and covering a position mean you are de-risking, right? Well, in reality, what I'm actually doing is taking profit. With this understanding in mind, I assume profit at the first rotation into balance, take profit in majority or 70% by about this area, and still manage to walk away with profit in the event the price comes back and takes me out. Not only does this allow me to sit on a trade and allow itself to work through its distribution in the auction process, but also improves my confidence in taking the next trade while allowing me to take more trades without enduring the difficulties of being in drawdown. As price moves towards the end of the distribution, I take 20% more profit at the higher or lower end of the value area, i.e. support or resistance. At which point I am at ease, not forcing anything any longer. This allows me to assume profit at price as price attempts to break out of range and begin to possibly trend, with the peace of mind that I no longer have any attachment to the moves that comes after. This allows me to take advantage of not having to feel like I need to chase price as it runs, and I can sit back and allow price to trend for the most beautiful 20 to 50 point moves on the ES or 50 to 100 point moves on the NQ. I do all this live Monday through Friday, so feel free to join me and watch me execute those very trades. As a quick example, I'm going to use one of the trades that I posted on the YouTube community live from 2 days ago during the same market session we're watching over right now. I initiated along at the value area low at 73, which coincides with this value area low line we're seeing. The low of that current range was 70. I took the trade at around the 73. As shown on this DOM here on the right, which is the ES DOM, I also took a long on the NQ at the same time. But for the sake of simplicity, we're going to be covering the ES trade. In that same trade, I explained in the comments below where I was going to take profit, okay? And this is going to coincide with the way I take profit on any given trade. Initial profit going to be taken at 78, which coincides with the start of that volume profile, the thickness of it, right? I take 70% of my position at that first volume layer up, and I'll trim some more on the way there. As you can see, 83 to 85 is going to be the thickest part of that profile we're going to experience. And the rest, we're going to sit on those runners and see where it goes. And you can see that from that trading session alone, we rallied about 50 points, give or take, from the break of that distribution.